Singapore's STI closed a touch higher, up a third of a percent on the first day of trading in the new year. It was one of the few markets open today, with key markets in Australia, Japan and mainland China closed for the New Year holiday. And the STI took off at the start of trading on the back of reports of a 7.2% GDP growth for 2021. While trading was choppy before hitting an intraday high of 3,135.96, it went on to close the day up more than 10 points at 3,134.25. Leading the gainers was Jardine Matheson Holdings, which gained 1.16% to $55.65. ASUS shares jumped about 2.5%, while Venture was up 0.77%. Today's losers include Prudential USD, down about 14%. A fintech company iFast was down about 1.43%, while Jardine CNC dropped about 0.34%. And for more, we're joined by Mark Matthews, Managing Director and Head of Research Asia at Julius Baer. Well, Mark, a modest increase on the STI today, closing up about 0.3%. Now, that's despite reports of strong GDP growth and property estimates. Why is that?
I think one reason is that if I just look at my own office as an example, most people still aren't back from their holidays. So there aren't as many participants in the market as there normally are. And the other thing I'd say is that the Singapore market, like most markets in the world, takes its cue from the US market. And so we would like to see what the US market is going to do to start the year. I personally think it will do well. And I think that we're in a risk rally probably throughout January. And January should set us up for a good rest of the year.
What could change the trajectory of the STI's performance? Specifically, how heavily could, that GST announcement, interest rate hikes, potential Omicron wave weigh on the market?
Interest rates would be a big one, of course, as you say. And let me just say that even if the Fed raises rates 3 times this year, which they've indicated they might do, that would still only take their prime rate, the Fed funds rate, to 1%. And 1% is just not a high rate in any context, historical, relative, in any context. So 1% is not going to kill the Straits Times Index. And then GST, well, a lot of countries are going to be raising taxes, not just Singapore. And I think what's more important is the economy. If the economy is strong, that will override the increase in the taxes. And the consensus is looking for 4% GDP growth in Singapore this year. I think it's going to be a lot higher. And actually, it leads me on to the last thing you mentioned, which is Omicron. And I think that Omicron is actually heralding the end of COVID. I don't say that lightly, but this is a much less deadly disease, but it's also much more contagious. And the combination of that is actually a positive, because it means another variant is probably not going to be able to come along and overtake it. So we're all probably going to get a little bit sick. But the key message is a little bit sick. And I know so many people who have Omicron right now, family, friends, it's just going like wildfire around the world. But they all tell me it's basically like having a bad cold. And you can see that in the data from the countries that led it, South Africa, the UK. Hospitalizations and deaths are simply not going up. So anyway, yes, I think that the economy can be quite strong this year, because I think we're going to see the end of COVID soon.
Yeah, and just getting you to elaborate a little more on that, is today's trading performance any indication of how the rest of 2022 could look like? And also, if you could tell us where will the biggest winners and losers be?
No, one day does not a year make at all. But I do think that it will be a positive year. And then also, don't mean to obfuscate on your question, but where you want to be positioned, let me just say that last year, 85% of fund managers underperformed the S&P. And fund managers are the people who we pay money to outperform the S&P. So most of them underperformed, and it shows you really that even the experts are having a hard time in getting it right, knowing what to overweight or underweight. I would simply say own the index, own the market. The S&P ETF is a great way to do that. And so maybe the cyclicals will outperform, maybe the technology stocks will outperform. It doesn't matter. You'll be in the market. That's the important thing.
Well, thanks for that, Mark Matthews there. He's Managing Director and Head of Research Asia at Julius Baer.